Hello, hello. Today we're here to discuss Clorox, CLX, and build trade strategies around Clorox. I'm here with David, and we're going to discuss about Clorox. So welcome, David, and let's go ahead and start our discussion. So I'm going to go ahead and share my option screen where we can at least start putting some scenarios together on Clorox. And this will be an interesting discussion. And just David, I enjoy having these discussion with folks because the whole idea here is, everyone has bullish, bearish ideas, and it's all about how we can de-risk ourselves and even be bullish and find different methodologies to kind of get in. So let me pull up my screen here and get started. Hey, Danielle, how are you? I just saw you join. Welcome.
Yeah, thanks.
So let's get started. Okay. Grid. Okay. Can you see my screen? Has it come through yet?
No.
Not yet. Okay. How about now? Is it there? Okay, perfect. So let's get started with CLX. Okay, so it's trading at $202. Okay, just kind of it's taken a beating down after July, September. Hasn't taken off since then. There's a little bit of a bullishness that have started kicking in right there. Today, right? There.
Yeah.
And let's see the 30 days. You can see that better in the 30 days. But we don't know whether that's strong enough yet or not. So let's go ahead and look at what, David, you're thinking here. So you're thinking about going back bullish in it, right? Kind of thing. Is that your thought process, David?
Yeah, I thought because it was sold off, I think it was an overreaction because of the vaccine news.
Okay.
Yep.
So are we thinking that okay, maybe COVID wave 2 is coming, so it's going to start going back up, something like that? Is that your thought process, or what's your thought kind of thing?
Well, my thought process is that they're gonna keep selling a lot of their of the products that they make, right? It's still at least for the next 6 months to 1 year. So that's why I'm in the short term and the midterm. I'm bullish. I think it's gonna bounce, right?
Gonna bounce. Okay, so short, midterm only. So you're not looking like 1 year out. You're just looking, okay, in the next few months kind of thing, maybe, or next month or so, right?
Yeah, because it's still a bit expensive, right? 22, 23 PE, so yeah.
Okay. So then, what are a few contracts that you are thinking? How far out were you thinking, or do you want me to give you a suggestion?
I was looking at the calls for 100 days out. That'd be February. Yeah.
Yeah, February. Okay. And you're looking at something out of the money or in the at the money or in the money, somewhere around there, right?
Yeah.
Okay. So let's look at the first thing we would do is let's look at the extrinsic value. Okay. So obviously this is the most expensive contract. So I don't know if you know by definition what extrinsic value means. Extrinsic value means the money you're paying for the contract, not for the internal value of the stock, right? So it makes a difference when you're looking at the ones in the money, pretty much. Out of the money, obviously, most of it will be extrinsic value anyway, right? So, so if I were to look at that, anything out of the money, I'm liking this $4 one and $2.15 extrinsic, 220, 230. Those are good price points here. 210 is obviously very expensive. So I'm not a good fan of that. Let's look at the deltas real quick. Delta, delta, delta. So, okay. So the deltas are not that great. They're stronger here. Pretty much it gets stronger as you go in deep in the money. Um, where are you setting your price target at? Are you thinking like it will go to maybe 220, or what's your? I know we're just shooting it in the dark right now. So
I was thinking it could go back to this trading range between 204 and 220. So maybe a strike price of 210. I was thinking about that.
210. Let's look at the theta decay on that one. Oh boy, yeah, that's pretty solid. So you're going to lose $5 for every. It's a heavy decay right there. Theta decay right there. So like, if you're going to be bullish and you're going to expect, like, if you're expecting this will only go to 204, you're probably going to be doing a swing trade, not a slightly medium term trade, in my opinion. Which means that you can do the 210 if you're doing a swing trade, but if you're not doing a swing trade, you're doing like a month trade, you're going to get impacted with data heavy, which means it'll start decaying pretty fast on you, right? So, like, I personally think a good choice for this trade would be somewhere around 220 call. And somewhere, if you want to go like super bullish, like, then I would go in the money and I would go somewhere at 190. I think that's probably fair. 190 or 220. This is super bullish. This is kind of trying to ride the wave up kind of thing. This one's the 220 is more like a good swing trade, and the 190 is a good like monthly trade, which means that you know that you're medium term bullish. So you can, on the 190, maybe you may be able to hold it out a little bit. On this one, you just have to hold it out for a week or two because it'll start decaying on you
Okay,
fast.
yeah.
So that's my thought process there. Now, so fair enough with those contracts. Now, do you want me to share another ninja technique here
Yeah, sure.
on
Yeah.
top of it? Let's
Yeah.
let's do a ninja technique, right? So now, if you're going to go bullish here, right, at these levels, right, you're saying that I heard you say that maybe 220 is probably the tops, right, kind of thing, where you'll kind of exhaust, kind of thing, right? So let's go short term contracts, and I like the way you picked 100, okay? Because decay doesn't happen really fast at 100 days. It starts happening in the less than 50-day period. So just I like that fact. But and we manage it sooner than way sooner than 100 days, but we're picking a 100-day contract. So let's go ahead and look at premiums here. You said maybe 220. Let's see, 220. There we go. So do you see this contract right here? So when you buy that call, you can go ahead and sell a 220 call against it. When you sell a 220 call against it, what's going to happen here is you're going to collect $106. So how much are we paying for the other contract here, the 100-day out? We're paying there it is. So this would be about 300 and it's about $400. So think of it this way. While you're placing this trade right here, the February 19th one, okay, in the short term, you want to do these closer as possible, like at least try to get them within 45 days, okay? So we're at 37 days out, which is fine. So this will decay. Anytime you're selling, you want it to decay fast, okay? So what's going to happen is in this contract right here, the 220, you're going to collect about $1.05, $1.10 on this,
Mhm.
and that will pay partially for this contract that you're trying to buy. So you're pretty much like you're lowering your cost basis by doing this. And if a run up happens to 220, hypothetically, right? It goes higher than you expected it to go.
Mhm.
Then you're going to be canceling your contracts out at that point out in the future. So what happens is this one will pay for whatever you're going to lose post $220. Fair enough. And keep in
What?
mind that as this goes up, you're going to build up quite a bit of deltas on this. So this is going to grow, and it's not going to decay as fast. And as you lose money here, it's going to decay faster because it's closer in time, right? Does this
So,
make sense to you, or is that kind of like confusing a little bit?
well, yeah. Let me see if I understand. You're the second one that you're buying, the one in December. It's kind of like a hedge against the other one, right?
And we're not buying, we're selling. Yeah.
You're selling, yeah. You're selling. So, in case the stock goes up fast, do you close the position that you sold? You close it early,
Yeah,
or you just
we can close it early, but I tend to wait till the last week of expiry or 2 weeks before expiry, because just remember, anything you're losing here, okay, is less than what you're going to be making on the other side,
Mhm.
right? So and we're not worried until it goes above all the way to 220, right? So that's really far off. We're still playing in the 201s, right?
Okay.
So if it goes to 220, overnight or something, you have a higher, higher probability of making more money in that February contract, and in the December contract you will lose less.
Yeah.
And then at that point we have to come back and re-evaluate. Okay, and what I mean by re-evaluate is, now we sit again and discuss, okay, you're at 220 now, and this is now hurting your hedge is a little bit hurting, you're not able to fully monetize on the other side.
Mhm.
What do you want to do? Do you expect it to go to 240, 250, or you want to just call it quits at that time, take your money and walk away,
Mhm.
right? So you kind of have to make that decision at that point. Most people get a little emotionally excited about it, and they want to move the call further out.
Mhm.
So we can also do the push the can forward. I call it the trade-in program. We can trade in the 220 call for a further out expiry. So
Mhm.
that's why we did this 37 days. At that time, we'll find another one that's further out at a further strike price, and that will be paying us for the loss that we're going to incur on this contract.
Mhm.
Cool.
Yeah.
So there's a lot of ways to play it out after things happen. So maybe we can have another session if Clorox goes all the way to 220, and then go from there. But this is just a ninja suggestion. And the way I look at it, David, is this right here is helping finance part of this trade for me. Right? That's how I think of it. Right? You're paying almost $4 for this. You're ready to pay $4,
Mhm.
and you lose it or keep it, whatever. You're going to play with that contract. But now here you're getting paid for this one.
Yeah.
Cool.
So the best outcome would be for the stock to stay at 219.
No,
Is
the
that
best
correct?
outcome is for it to keep going higher and higher.
Okay.
Like in this contract, you want it to go higher. You want it to go all the way to 220 and even further up. Guess
Okay.
why? Because the sooner it happens, the better. Because this one will have a lot of extrinsic value for you to keep, and this will even have more deltas. This one will go ahead and decay fast because it's shorter time. So you'll still be net positive
Okay.
after it crosses 220. That's the beauty of this. You still be net positive because of the time difference. We're playing with time. here. One is closer in time, one is outer in time, right? So that's kind of the idea. And the other thing is we have strategies beyond this, right? Ninja level 2, which is when we reach 220, we can push this call out further.
What does ninja level mean, or ninja mean?
It's just a random word that we're using to extend beyond just buying calls and puts.
Oh, okay. So like advanced option strategies, basically.
Yes.
Oh, okay.
Yeah. Just making it sound cool. Because most folks here that we're getting are just buying calls and puts. So
yeah. Absolutely. I completely agree with that.
Yeah. So it's just trying to get them to understand the advanced levels. Yeah.
Okay.
Yeah.
There's probably a better word for it. If I come up with it, I'll tell you, and you can.
Sure. Let's
you can weigh the two.
I'm okay. I'm up for suggestions, like the way we did with jellyfish. I took someone's suggestion and implemented it. So we have jellyfish now.
Okay.
Yeah. So I'm open for any suggestions.
That's smart, man.
Yeah.
I wish I was more open-minded like you.
Cool. Daniel, any questions?
No, just trying to take it all in. Thanks for all your help, man.
Oh, no worries. Yeah, just here. But that's pretty much all I had. Anything else? We end it with the Clorox discussion. You cool, David?
Yeah. Just wondering one last thing. Like, when would be the best time to close the position, or how do you determine that?
How to determine that?
Yeah.
So on selling premiums, it's a no-brainer, easy thing, right? I tend to wait the week of the expiry or 2 weeks before expiry.
Yeah.
On these ones, it's open-ended. Okay, I'm not going to put a scientific method around it because people it's dependent on the product, right? How fast the product runs up, right? So if Clorox takes a supernova cycle, like some people will stay in it longer. Some people will take their profit 100%, 200%, 500%. I think that decision is totally up to you. Where are you satisfied? I would say if I set those criteria today, we're setting people for failure, in my opinion. And like, for example, I had that situation in Neo, right? Is trying to do the Neo trade. I used the ninja technique in Neo as well, but I wanted to keep the call open as well. But then when is enough, right? It's never enough. So just because of that, like you kind of have to make your personal judgment call on that. But in our premium group, I normally share when I'm closing it. So whenever I close kind of thing. So and then it's up to the folks whether they want to keep it on or not. And so does Leon. He shares when he closes his positions at that point.
Right. Okay.
Yeah, this is good. These are really good questions. Appreciate it. And yeah, feel free to ask more questions here. We're here to kind of help each other out and grow this community and strategies. Have the two-way dialogue with each other. Okay. Take care, everyone. See you guys.
Thanks.
Later, man.